Okay. Hey, hello everyone. Thanks so much for joining us this afternoon for our live presentation. My name is Greg Lewis. You're probably wondering, hey, if we're starting in 9 minutes, as it says below there, why are we starting now? Like, what's the deal? Well, the deal is we usually start about 10 minutes early from our live presentations to give people time to meander in and get their coffees and get their laptops or whatever all set up. So when it is time for the actual live presentation, they're ready to roll. So if you're watching this during the recording, you can just fast forward to the actual event. Normally, I edit this part out. So anyway, I'm Greg. We're coming at you from Salt Lake City, Utah. We're having some gorgeous fallish weather today after a brutally hot summer. And a very brief fall. We're starting to look at snow next week, so welcome to Utah. That's the way it is around here. No springs and no falls, just winters and summers. If you haven't heard of MetaStock, we are purveyors of charting software and market data for active traders just like yourself. If you're so inclined, I'll play a little video for you right now so you can learn more about us. And while you're watching the video, if you do log in, please do go ahead and make sure to say hello. I see that many of you are already here, so don't be shy. Reach out to us and say hello, and I'll be right back.
Hi there, Greg Lewis, MetaStock Software. As the marketing director, I get asked all the time, what is MetaStock? How can I help my trades? Well, stick around for about 3 minutes, and I'll tell you. MetaStock is an award-winning software and data package that has been helping traders for over 35 years. Simply put, MetaStock is a tool for traders like you to analyze the markets. MetaStock helps you take the guesswork out of trading by offering a methodical, systematic approach to some key questions all traders come up against. Questions like, how do I decide which securities to trade when there are literally thousands to choose from? Which strategy should I use, and how do I test that strategy before spending my first trading dollar? When should I enter and exit a trade? How can I effectively manage the securities I'm interested in? And of course, how do I know where prices will go next? At the core of MetaStock are the Power Tools. The Power Tools give professional-grade analysis tools to private traders like you and me. You can scan the market with the MetaStock Explorer to filter and sort securities that show buy and sell signals based on your criteria. The MetaStock System Tester lets you test most strategies through a process called backtesting, which allows you to see how your strategy would have performed over time. You can easily manage and monitor the securities you are interested in with Quote Center. Quote Center lets you sort on a variety of criteria to view the data that's important to you. Then just double-click on a security if you want to see its chart. With the MetaStock Forecaster, you can even take advantage of patented technology to view probable future prices. If you're an options trader, you're going to love MetaStock's OptionScope. OptionScope puts all the critical info at your fingertips, displaying sortable, customizable, color-coded options data, including the Greeks. And MetaStock has solutions for traders of all levels and interests. If you're just getting into trading, you will appreciate the education offered by our many built-in systems. In addition to pointing out buy and sell signals, MetaStock explains how they work in an easy-to-follow commentary window. MetaStock has built-in systems based on popular strategies like MACD, Bollinger Bands, turtle trading, candlesticks, and many more. MetaStock even has the very popular and exclusive Rahul Mohindar Oscillator System, or simply known as the RMO. And as you become a more experienced trader, MetaStock grows with you. Advanced analysts will enjoy the comprehensive list of trading systems and indicators, and the ability to build their own systems. And if you're a day trader, you can't do better than Zenith, the real-time news, data, and analysis package offered by Refinitiv, a world leader in market data. Add on the world-class support, and it's not hard to see why MetaStock has won the Stocks and Commodities Reader's Choice Award for for 26 consecutive years. To find out more about MetaStock and how it can help your trading, visit metastock.com or contact a product professional via phone, email, or chat.
Okay, I hope you all enjoyed that. Don't forget today, if you have any questions about MetaStock, today's presentation, though not specifically or necessarily about MetaStock, will certainly be showing charts on MetaStock. And you can ask Jeff or me or Vince questions about the presentation. If you have questions about MetaStock that are sort of off topic, don't hesitate to chat in to our MetaStock sales professionals at metastock.com/sales chat. I will pin that link at the top of the chat just as soon as I get an opportunity. We are starting in about 3 minutes. A couple of things I did want to mention before we start. We are just now implementing a few things that I can tell you about, but I can't yet do it because I don't have the landing pages prepared yet. But we are, during the months of October and November, going to be promoting some special training by Oscar Carboni. I don't know if you know Mr. Carboni, but he's a force of nature, as we like to say, and he's a really top-notch chart analyst, and he's going to offer some training up. And you can find out more about that right now, but just by chatting with one of our sales reps. I don't have the landing page or even really the dates. I think the date we're going to do it is November 20th, but I'm not certain, so don't hold me to that. I do know another date, that's for sure, is on October 26th. We're doing our monthly summit, which is 8 great speakers and 8 great hours, and you know you don't want to miss that, and that is absolutely free. Even though the speakers are still not all tied down, you can go to metastock.com/traders-summit. That is metastock.com/traders-summit, and register now. You'll see more or less a TBA page, but it has a form on it, allows you to register for that webinar, and then you'll be notified when we have the speakers in place, and you can receive reminders about when it takes place. Another way to always be reminded of when things are going on around here live is to like and subscribe our MetaStock channel, our YouTube channel, I should say. Just go to youtube.com/metastock. You're probably already here if you're listening to me now, and just hit the like button if you like this. If you don't like it, you don't have to like the button. Hit don't like. Be honest. And then also, if you wouldn't mind subscribing, and then also hit that bell button so that you can be notified every time we have a new live event. It's very helpful for us, and it's a great way to receive information from a bunch of different guest speakers. We usually have 2 to 3 of these events a week, and the guest speakers are awesome and very learned traders. So we're going to be starting in about 1 minute. Jeff is there. He'll be our host today, and the guest is Vince Vora, and he'll be talking about finding breakouts with one indicator, with one simple indicator, and it's always a pleasure to have Vince here, and I know you guys are going to love it. Once again, please do, I see there's many of you here, say hello. Say hello, just say hello in the chat. And again, if you're watching this later and you still see me here talking, you can fast forward to the part here in 50 seconds from now where we actually start the presentation. And I see Jeff's just getting back in his chair, so all right. Again, that is if you want to if you want to chat at all with our product professionals, just go to metastock.com/sales chat. Metastock.com/sales chat. I will type that up here in the chat here in just a second. All right, 25 seconds to go, so I'm going to go ahead and mute myself. And once again, thanks for joining us and successful trading.
Hey, everybody. I guess I better get started. Welcome. I hope you're doing well today. Having a little bit of some chop in the markets, but it's going to be okay because we have a really good expert here to kind of talk to us about that. Anyway, let me go ahead and read our legal disclaimer. Today's demonstration is designed to instruct you on using Metastock and the accompanying software plugins. It's not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. Metastock shall have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. And Greg, I will let you know that your microphone's on, so just so you know. You're okay. Our guest today is Vince Vora. Vince and I go way back. I remember, I think we've been working with him for over a decade now, but I remember we've kind of worked on some different systems together. The latest one is the Victory that we're going to show you. Vince, I would consider a great mentor. I love kind of the really specific way he kind of explains stuff and things in a very understandable way. I love kind of the advice that he gives on position sizing and not trading more than you can afford to lose. And I just think overall, he's been a great business partner and he's been a lot of fun to work with as well. And I've learned a lot from him. So that's what you're going to get for an introduction today, Vince. I hope you enjoyed it. But how are you doing?
Thanks, Jeff. I'm doing well, thanks. And thanks again for having me on. Appreciate it.
Absolutely. We love having you here. Let me go ahead and make you the presenter.
All right.
There you go. Yes. Okay.
Okay. Let me see if I can share my screen. All right. Yeah, you should be seeing my screen.
I see a very, very nice looking chart.
That is the SPY, the spiders, the S&P 500. Yes.
Oh, I meant it looked good because it was in Metastock, but that's
absolutely.
We can hear you. Everything looks good. I'll get out of the way.
Okay, great. Thanks again for having me on, and thanks everyone for joining us today. The intent here is to show you our victory system, but I will start with just a quick recap of what's been happening lately with the markets. Obviously, this is the chart of the S&P 500. 500 of the biggest stocks on the U.S. market. And you can see that for a very long time, and I can go even further, I can bring in more data. It's been trending very strongly to the upside. But recently, and by recent, I'm talking about the last 2 or 3 weeks here, we have rolled over a little. And, it's nothing drastic yet, nothing that we should be overly concerned about, at least not yet. But we have moved below the 20-period moving average. We have even challenged the 50. And if you look at this from a basic technical analysis standpoint, even before we look at the indicator and talk about using the strategy, just looking at the pivot highs and lows, we can tell that this has gone from higher highs and higher lows to lower highs and now lower lows. So obviously, right now, the near-term trend is lower. But what I really want to talk about today is how to not just spot these opportunities, but take advantage of them. And that's where victory comes in. So what you see on my chart here, all these arrows, these little dots, and exit flags and so on, that is the victory indicator. And been trading with it now for a better part of 2 years. I believe it's been just before the pandemic start. And it's been fantastic. It's been very responsive and very reliable. What you see here, these arrows are obviously trade setups that happen when two specific indicators come together that are very reliable. Now, what we're trying to do here with victory is trade with the trend and with momentum. So although you see numerous arrows and dots on your screen. The intent here is not to take every single signal. What we want to do is take specific ones that allow us to take advantage of the strongest trend at a time when we have the strongest momentum on our side. So this line here, this blue line that you see, that is the 20 period simple moving average. And that plays a big part in our trade selections. Reason being, it is a great indicator for momentum. When you have slope in the direction of your trade, and the higher the degree of slope, the better, obviously, you know you have momentum on your side. Not to mention the fact that it's probably one of the, if not the most popular moving average out there. It's used by numerous professionals along with many retail traders as well. So there's a lot of eyes on the 20 period moving average on a regular basis. And so every time price moves back to that 20, you tend to get a lot of activity. And so not only do you want to be on the right side of the 20, you want to be, you want to take advantage of these opportunities that victory will highlight for you. So the arrows are a new trade. For example, here, you know, the red arrow, we were going short, and then we switch immediately to long. You don't always have an exit flag. Sometimes you're going from short to long, long to short. But again, we're not taking every single trade. And one thing that I want you to focus on throughout today's presentation, again, is that slope of the 20. I only want to focus on trades that have slope in the direction of the trade. Okay, so if you see a red arrow here, but the 20 is sloping higher, we do not want to take that trade. We can use it as an exit, that's for sure, but not a new entry. Okay, but every arrow, green arrow with an upward slope on that 20, we definitely want to consider. Every green dot we want to consider, etc. On the flip side, if the 20 is sloping lower like it is here, we definitely want to look at any new red signal, be it an arrow or a dot. The dots, I should say, are what we call a re-entry. In other words, the only reason it's a dot and not another arrow is because we're already short. The system has already identified that the market should be moving lower here, and the same criteria that came together here has once again come together here, and that's why we throw a dot on there as a re-entry. In case you did not take advantage of the initial entry, you can take advantage of the subsequent ones that show up along that trend. And now here, just to be clear on this one, we did not want to go short here. Again, we had upward momentum, but now the re-entry is one we definitely want to take short. So we'll go through many examples, and there are certainly ways that you can make victory even stronger, different tools you can use to make it even stronger. With this indicator come a couple of training sessions where we will teach you all of that. But as an example, what I want you to keep in mind as we go through this is just the basics of technical analysis that you can use along with this, that you should use no matter what strategy or which indicator you end up trading with. You should always be on the lookout for your pivots, right? You want to make sure you have higher highs and higher lows when you're looking to trade long, and lower highs and lower lows when you're looking to trade lower, and also basic trend lines. A very easy or simple demonstration of that. If you look recently at these pivot lows that we've had throughout the uptrend, and you draw your trend line right along there, you can see that once price broke below it, it came back to retest it and failed. And there was our re-entry. It was a perfect entry short. And we are still short the S&P 500 here. Okay, so I want to make this as interactive as possible. Please, whether you're on YouTube or whether you're watching us here on this webinar, whether you're joining us live, by all means, type in your questions in the chat. Type in symbols if you want to see how victory would have done on that particular symbol. Happy to show it to you. I have a number of symbols that I've chosen at random myself, some of the more popular ones out there, but by all means, happy to bring up any symbol you like. All right, so here in the S&P 500, if we look at the NASDAQ 100, just going through the indexes, again, if we focus on the setups that happened while the 20-period moving average is sloping higher, you'll notice numerous profitable setups, right? Again, it's not going to be 100% accurate. Nothing is, no question. But if you focus on those trade setups that happen when you have a clear trend and momentum in one direction, your accuracy rate should be extremely high. And again, we can go further back here. This has been trending for a while. You can see when you have a strong trend, it's kind of obvious. First of all, the chart is very clean. The price bars are very similar in size, right? And, you know, they hug the moving average very consistently. And these setups are very, very easy to take. Obviously, how do we spot a trend? Higher highs, higher lows. How do we spot momentum? Slope on the 20. So we may not have had it here. We would not have entered this one, but we definitely would have here, all the way through. And you can see how many more winners than losers there would have been, and some fairly decent wins. And this is not something that we need to go cherry picking for, meaning you'll see this over and over and over again on chart after chart after chart. So here's Goldman Sachs, for example, right? You can clearly tell when Goldman Sachs is consolidating compared to when it's trending, right? It's very easy to spot on the chart. Now, you know, the only difficulty you may have is spotting the initial start of that channel, right? That's where the 20-period moving average comes in. So here's a great example. Right here on this long entry here back on June 12th, the 20 was still trending higher. So that is definitely a trade setup we would want to take, right? But we get stopped out very quickly. And from that point on, you can see how flat the moving average was, which would keep us out of every single one of these signals, okay? Just using that one technique, and we will show you others in the training, but one simple technique, adding that sloping 20, right, would have caused you to get stopped out on the very first one, but then skip all the rest. And then from that point on, once it starts to trend, look at that move there, this one here, a re-entry here, profits start to pile up, right? So that's exactly what you want to focus on, the areas where you have a strong trend. Now, if you're more aggressive and you want to catch the actual breakout, you can do that as well. Very simple. Take your trend line tool, attach pivot high to pivot high, right? All the way across, right? You want to draw the line across as many points as you can, right? The stronger, the more points you can touch along that line, the stronger that level is of either resistance if it's above price or support if it's below. So this channel, right, we could have drawn this as the channel right here. And what we're looking for is some sort of breakout. Now look at that. Here's this arrow here that happens right when we break above that upper trend line. So even though we didn't have slope at that time, if we're more aggressive, we could have entered that trade, right? Now, personally, myself, I stick to the easy ones, the ones with the slope in my favor, just because there's so many to choose from. I don't need to go looking for these, but these are absolutely breakout trades that you might want to consider, okay? The system, again, is based on really two technical indicators. There's nothing fundamental, no fundamental analysis that comes into this. That doesn't mean you can't marry the two. you can, do all the due diligence you want on these companies and trade the ones that only the ones that you believe are fundamentally sound. But really, at the end of the day, it doesn't really matter, because when a stock is moving like this one did back in here, it's for a reason. Do we need to know what that reason is? No, we don't. All we need to know is that there are certainly more buyers than sellers, right? And during a strong trend lower, there will be more sellers than buyers. That's all we need to identify, and Victory does that for us. Now, whether you prefer to trade on a daily time frame, a weekly time frame, a monthly, or something much shorter, a 1 minute, a 3 minute, a 5 minute, it really doesn't matter. It works exactly the same on all time frames. It also works on any market. So whether you want to trade futures or forex, for example, equities, it really doesn't matter. And if you're an options trader, then that's even better, because you can leverage these positions. And so I highly encourage you to learn options if you're trading this. Jeff and Greg, if there are any questions from YouTube, please let me know, because I cannot see that chat.
We will.
Okay.
I also wanted to make sure that everybody in GoToWebinar could hear okay. We've had an unusual amount of audio issues with people in GoToWebinar. So if you're in GoToWebinar right now and you can hear, let us know in the chat. We would appreciate it.
All right. Great. Target has been trending for quite some time here. If we go back and I bring in more data, you can see that Target, has really done well, going way back to the end. Jeff, I'm hearing an echo. Maybe there's a mic open somewhere, but right here. No, all right, no problem. So here was the that shutdown back in 2020, February, March, right? The start of that pandemic, and that we saw that drop. And then once it started to recover, look at that move. It went from about $100 a share to about $270, and it was quite the run. But recently, it's rolled over. Now, again, if you keep it simple and you're strictly looking for those setups with slope, right? You would have missed several of these signals along the way, but you would have caught some major moves. And just recently here, you would have really caught some nice trades. Remember that the one thing a lot of us worry about as traders is the market turning on us, right? That is the reason why I came up with this system. I had traded with Veracity, which was my baby for many years, but I wanted something that was a little more responsive on the turns, right? So for example, here, you had a real strong trend, right? And if we draw a trend line across these lows, right? There's the break of that trend line. And it just so happens that Victory catches it at that exact moment. Now, again, if you're a little more aggressive and want to play the breakout, you could have certainly gone in right there. If not, and especially to the downside, and we haven't even seen panic yet. Wait till you see panic set in. Then you'll see some real strong moves lower. That's when you get a very sharp slope on that 20. And that's where the biggest opportunities come in, both ways. So there's been a couple here that have worked out phenomenally well on target. And it's not over yet. Still in this trade short. Some of the bigger names, right? Tesla, for example. How many people like to trade Tesla? It's the same thing. When you catch a move, when there's a huge move, and again, here's a perfect example, right? Where if you're looking for a breakout, right? There it is, right? You could have taken it there, but if not, take the easy way out. Do the safe thing. Wait for a new re-entry or an original entry along an upsloping 20 there, right? Look how sharp that slope in the 20 is. That is extreme momentum. Remember, the 20 period moving average, the way it's calculated is you take the last 20 bars, right? And you average it out, right? And so obviously this had been moving very strongly to have a slope like that. And if you look at the candles in here, the price bars, we closed out at the highs almost every single candle, right? That's showing you extreme buying pressure. So you get a slight pullback. When you get a signal to enter, any one of these would have given you a huge move higher. Just a fantastic trade, right? And now, recently, there have been a few others here. Not everyone has worked, but this is what gives me the comfort in trading with victory. It's not so much the huge opportunity to the upside. I mean, it's great when you catch a trade like that. There's no question about it. But when you get in and it does not go your way, the losses are small. In other words, it gets you out immediately. Okay? And again, just because it's a red arrow doesn't mean you go from long to short, right? You need to have slope to the downside if you're going short. So, but it does mean you want to exit. Now, sometimes you'll see an exit flag. Sometimes you'll just see an opposite color, a change in color. But either way, here's another one. We get in, it turns, it tells us to get out immediately, right? So, you know, if you got caught here, any of these, even on this one, would have been break even at best, but just catching one of the other ones would more than make up for those because your losses are kept small. And that is the most important thing when you're trading, all right? Let me show you a few other examples. Crude oil. So I'm going to use the futures contract, right? Just to show you that it's not just stocks you can trade with this, but futures and forex, anything. So here's crude oil. We know crude has been on a run lately. This is what now has become a concern for the market overall because this is contributing to inflation, right? As price of oil goes higher, it makes a lot of other things a lot more expensive, and that's becoming a real concern. But along the way, boy, oh boy, you could have made yourself a real nice amount of money here along the way. I mean, look at some of these trades. Here's, again, a situation where you could have had a breakout if you draw a line across these pivot highs. But regardless, flat moving average, so we could have just taking the easy way out and saying, I'm going to ignore that. It's flat. I will wait until we see a signal along a sloping 20. And there we go. We enter here. And we had a real nice move. Re-entries, what do you do if you're already in whether it's there or here, and you get another re-entry? What do you do? Well, if you're conservative, meaning you're not taking that much risk, you don't like risk, like myself, you just take this signal as another sign that you should stick with that trade. That even though you've gone up nicely, the move isn't over yet, right? Doesn't mean you can't scale out. If you have multiple option contracts or numerous shares, you could start to scale out. But this is telling you the trade is still on. Once again here, it's on. Now, if you had missed the first one, you have numerous other chances to get in. If you're more aggressive, you can add to your position at every subsequent setup, right? So imagine if you bought a contract here, you add another one along the way, and then exited everything here. That would have been a real nice trade, right? And it's just happened over and over again. We had another nice one here. We had a couple in here that really didn't work out. But again, imagine how small the losses are here compared to the winners here. Then here you have slope, you get in and off it goes, right? Same thing. You get a couple of short trades here that worked out quite nicely, right? You didn't have to wait very long to switch sides. And then again, it turns around. We start to slope, and look at this entry recently. Beautiful. Trading is as much a mind game as it is anything else, meaning we as traders are our own worst enemies. We're the ones who bring our emotions into it. We're the ones who criticize ourselves. It's difficult as it is. What we're trying to give you here with Victory is a way to simplify it and take all the guesswork out of it and just look for two very simple things. The dots are arrows, right? That match the color of the bars, and that sloping 20. That's really all you need to focus on. You'll notice, obviously, I haven't said it. I didn't say it at the beginning, and I probably should have. That once you're in a trade, all the bars get colored in that color for the life of that trade, right? That's done intentionally so you don't get scared out of the trade. How many times have you gotten into a trade, seeing it start going your way and then see a couple of red bars and start questioning yourself and wondering if you should jump ship just so you don't give up your profits, right? Well, that's why we leave the colors all painted the same color so you don't get scared out of it. Okay, it's to help you remain in that trade. Let's look at a few others here. PayPal's a stock that tends to move, right? Again, when you sit back and you look at this chart, you might say, wow, that's kind of all over the place. It's going up, it's going down, back and forth. This scares me. I don't know if I can read this. Where do I draw my lines? Higher highs, higher lows. I'm not that experienced. I can't really read it. Remember, two things you got to look for, right? Those arrows or dots and the slope of the 20. So if I saw this green arrow, right, and I'm still a little confused about the chart, all I have to ask myself is there slope on the 20? Is it sloping higher? Because a green arrow, you want the slope higher, right? Red arrow, you want it to slope lower. So I'd say no. Once I saw this dot, though, was it sloping higher? Absolutely. Then I'm in, right? And off you go. You exit. Now you get another arrow. Is the 20 sloping higher? Again, yes, it is. You're in, and off you go, right? Back and forth. And that's really all you have to do. And the best part about this, you don't have to just manually look through charts to find these. There's a scanner that goes with it, and I'll show you that in a few minutes. Again, it really doesn't matter the time frame, right? Here's the monthly time frame, right? Now, Victory needs a certain number of bars to calculate the formula here, but once it did, and we had that entry, look at that, you'd still be long that, right? And I mean, we're talking about a move from 120. It's currently at 264. So if you're managing a retirement account or just don't have the time to trade a day in and day out, maybe you want to do it weekly. Maybe you only want to look at these charts on weekends and set up your trades for the week, right? These are the weekly signals, right? They're just as effective, right? All the way through. Monthly, just look at it once a month. It works just the same. TAN, which is the ETF for the solar sector, right? For the longest time, was giving us just some beautiful setups to the long side, right? That's what you need. You need a strong trending chart, and they're not hard to find. First of all, there will be a scanner that I'll show you that you can use, but second, just, monitoring the market, listening to things, which stocks are being talked about a lot, which aren't, and then you can just quickly pull up a chart and ask yourself, hey, is it making higher highs and higher lows, right? And is the 20 sloping? If it is, then all I do is put on my watch list and wait for these signals. It's as simple as that. Look at how many winning trades throughout this move higher, right? Then it turns. Look at that. It puts in a head and shoulders top, rolls over, right? Would we have caught this one? I would not have. I'll be very honest with you. That is not a trade I would take, right? Even though you could say, hey, this is topping out, right? The real chance it's going to roll over and the uptrend is over. we can draw a trend line, along the lows here and say, oh yeah, we had a trend line break, whatever you want. To me, there's no slope there. I'm still a little concerned about it, right? Now, it drops, it pulls back, gives me the dot. Is there slope this time? Yes, and in fact, a very significant slope. That's when you want to short it. Look what happens next. Boom. Pulls back, sets up again. Boom, another one, right? Pulls back, sets up again, another drop. Again, another drop, right? And if you get into an area like this where it doesn't really look like there's much of a slope, is there? It's questionable. Then you move on. Go to another chart and don't worry about it, all right? This is not about the ones you miss. It's about the ones you catch. So when you see something like this and it starts running away and you miss that trade, you don't kick yourself. Who cares that you missed that? Worry about the ones you're going to catch, because once you get in here and you write it down to here, that's what matters, not the ones you miss. There are thousands and thousands of stocks out there. It is impossible for you to catch every good trade, okay? But just a handful will make a huge difference to your P&L, okay? Now, the other thing I want to mention is that when you get a signal like this, let's say this dot right in here, right? When do you actually enter this trade, right? So what you want to do is allow that bar to close, okay? While the bar is open and price is fluctuating. So this is a daily chart, right? So, we open at 9:30 a.m. Eastern, we go until 4 p.m. Eastern every day. Well, at 10 a.m., that dot might appear, right? But in the noon hour, if things pull back like they usually do and settle down, that dot may actually go away, right? And then by the end of the day, if we moved higher again into the close, the dot reappears. Now, once that bar is closed, that dot is there for life, okay? So the only time you'll see that dot appear or disappear is while that bar is open. So say you're trading on a 1-minute chart. It can only appear and disappear like that during that 1 minute. But if that 1 minute bar closes, that bar or that dot or arrow is there for life. And so what I do is I allow that bar to close, okay? So if this was today's action here, I would let it close. And then tomorrow, when the market opened, I would want to buy on any move above the high of that bar. I call it the setup bar, right? Just to confirm that we are moving in that direction, right? So one tick, 1 penny above that high, and that's when I get in. Now, doing it that way, yes, it might gap the next morning, right? If there's really good news overnight or whatever, it might gap, and then it might be too far gone at that point and I skip it. That's fine. I won't enter a position that has a big gap on it, all right? If you're more aggressive, you can look at this for setups near the end of the day, like 3:45, right? 15, 20 minutes to the close, because by then you know that it's going to close the way it is and that dot is going to remain there. So you can jump in and go from there. You get a step ahead, so to speak, but that carries risk itself, okay? Because you're always susceptible to a gap on news overnight, so you never know. But if you go back and look at hundreds, thousands of charts like I have on this, you'll quickly realize how accurate it is. So you'll feel very comfortable using it. What else can we show? Bitcoin, right? Bitcoin, Ethereum, the crypto market works just the same. Here's Bitcoin, right? Again, you want to take the ones with slope. This one here, right? And any of the ones that have slope didn't quite work out, you'll notice very small losses, right? Very small losses. That's what matters. Look at these ones in here. Nice. Now, Bitcoin right now looks like it's, on another run here. Taking out this high here, encountering some resistance up here, but looks to have a lot of momentum and looks to be moving back to 65,000, if not higher right now, right? Ethereum looks extremely strong. But again, do we need to be analysts? Do we need to understand, everything about the crypto market to form an opinion as to whether or not this is going higher or lower? Or can we just, sit and wait for it to start trending? You notice how here the 20 is flat? It's flat. So did I enter Ethereum here? No, I did not. What I'm waiting for is for it to look like it was back in here. Wait for the 20 to slow, get a pullback towards that 20, see that dot, and then enter from there. Look at these trades back in here, right? The other thing I will tell you that you should focus on are the entries that happen right along the 20, okay? If you see an entry far from the 20, I would disregard it, because the further away you get from the 20, the likelier it is to snap back, right? So you're taking on more risk that way, all right? Let's look at some of the vaccine-related stocks, right? Pfizer, Moderna. Again, you look at this chart, right? Back and forth, back and forth, back and forth, right? Back and forth. So, you're trying to ask yourself, what is really going on here? But do I really care? All I'm looking for are those setups that happen along that 20 with a slope, right? Any of those. This was more of a breakout play. Again, if you're aggressive, you mark those highs, right? And even though this one here, at the time, you would not have taken it. Not only is it a flat 20, it was not above that upper trend line. Can you take it once it breaks the trend line? Sure you can. And every once in a while, there'll be a trend so strong that it won't pull back. It will not give you another opportunity to get in, okay? Do you kick yourself? I don't care. So Pfizer went on a run, right? Didn't profit anywhere along here, but I am now in here. That's all it takes. And again, there's so many other stocks out there. Let's look at Moderna, right? Look at all these entries along here. So easy. Be very picky. Be very selective when you're trading. And those training classes that I talk about that come with the indicator, the focus of what we teach in those classes is how to compare one trade setup to another. On any given night, when you do a scan, right, you're going to come across several potential trade opportunities. You can't trade them all, right? We don't have enough money to do that, nor do you want to overexpose yourself to one side of the market versus the other. So you want to be selective, and you want to pick the one, maximum two best trade opportunities for that given time period, right? And so we focus on how to differentiate one and the other. What you can do to compare the trade setups and focus on the ones that are giving you the best odds for success, okay? So any symbol requests out there from YouTube?
Yeah, quite a number of them, as you might guess. Robin wanted to look at NQ, ES, and RTY, and just let me know when you're ready for another one.
Sure. The symbol format for NQ, because I'm sure that you're talking about the NASDAQ, right?
Mm-hmm. And usually when I'm looking at NASDAQ, I just look at QQQ.O, the ETF.
Yeah, that's what I do as well. The charts are identical. And here we are. Right now it's trending lower. So, this opportunity here, we didn't have a huge amount of slope there. But we could be in the midst of another retracement here, may get another setup soon here. What's clear to me about this chart is that we've clearly broken trend here, right? So, we were certainly trending higher. and that broke back in here. So when we pulled back, that was an opportunity there to get short. If you're not already short, I wouldn't jump in now that it's farther away from the 20. I would wait for it to pull back. You know, if and when that happens and you get another red dot, that's when you want to buy some puts or short the Qs. All right. Again, any time frame, doesn't matter. Here are the weekly setups. Fantastic. Right. Monthly. Same thing. Look how clean those are on the monthly. The higher the time frame, the smoother the charts, right? The price action. So don't shy away from those higher time frames. Now, if you want to look at a lower time frame, it's the same thing, right? It depends on how active it is. You know, and sometimes, you know, during a strong trend, like I say, you know, the move is so swift, so much momentum that you don't get a big opportunity if you miss the initial one. But, you know, don't worry about it. There are plenty of others out there. If we look at, I think you also wanted the SPYs, the ES, which is the S&P 500. Again, we looked at this at the beginning, but the signals are very, very reliable all the way through. Have a look at the pandemic drop here. Back here, the start of the pandemic last year, right? We clearly broke trend here if you drew a trend line along these lows, and we got the signal at the same time. What we didn't have was momentum. It dropped. You know, at the time, this felt like, whoa, what a crazy drop. Felt like we're missing a lot here. It pulled back, and then look what happened, right? Caught that move beautifully. Caught this one as well, although unless you took profits quickly, it quickly turned around on you, right? And then we just started picking off those long entries. Looks fantastic. Any other symbols, Jeff?
Yeah, the next one was plenty. Trust me. Actually, the next one was RTY.
RTY. Excellent. Oh, the Russell. In other words, the Russell. I'm not sure which contract is best, but I usually
just go ahead. Go with what you use.
Yeah, no, I usually use IWM, the ETF, just the same, right?
That's what I was gonna say. Yeah.
Yeah. Now the Russell's been unique all year long. It has been flat. Look at this. Nothing to do here. And that's what you want to skip. This is where traders lose money. They get chopped up over and over again trying to outguess the market, right? All throughout here, everyone's thinking, okay, we're going to start to move lower. We're going to start to move higher, lower, higher, lower, higher. And they get in and get stopped, get in and get stopped. Why bother doing that when all you have to do is connect the pivots, right? And wait for a break one way or the other. Or just wait until the trend has started. So, you know, when you come out of an area of consolidation, you're going to miss the first portion if you want to wait to confirm the trend. But it doesn't matter, because if you miss the first 20% of that move here, right? It's the middle 60% that matter. You can miss the initial 20, you can miss the last 20. You know, at some point you're going to think, oh, you know, this has run far enough. This can't continue forever. And you're going to get more and more nervous about taking these setups. But think about it. If we had skipped this one, right, we would have missed that move here. But we would have caught this portion. We would have caught this portion. We would have caught that portion. Then here, we still had slope. We would have got stopped out quickly. But overall, how could we go wrong? Very small loss compared to 3 beautiful trades, right? And now here we sit and we just look at our watch list every night. And we're saying, nope, not time yet. Nope, not time yet. And we're waiting all year. But you know what the advantage is of this? You should all be super excited about the Russell being in almost a year-long consolidation. The longer the consolidation goes on for, the bigger the move coming out of it. When we come out of this move, whether it's to the upside or to the downside, we are going to have this type of move, one way or the other. the way you know how long the move will last is to measure the channel. So the same length of the channel here, we are likely to see a move either all the way back down here to the 150-ish area, or to fresh new highs that are much, much higher than where we are right now. So either way, there is a ton of opportunity coming out of the Russell. We just don't know when it's going to begin. And so just patiently wait. Looks like Matt is asking for Helen here. And Palantir, you know, had a real nice run when it first went public here. Unfortunately, we need, you know, again, a certain number of bars for formula to be calculated. And there have been a few opportunities like this one in here and these through here. Aside from that, not many on this stock. I mean, aside from that initial run, it's pretty much been sideways. But isn't this exactly the kind of chart you want to avoid, right? So who cares what the talk is out there or what the future prospects of the company are? Maybe it has enormous potential, but until it starts to move in that direction, do you really want to put your money at risk? Do you really want to put your money in this and sit through a year of nothing, no return whatsoever, while you wait for this company to, you know, to prove what they've been saying and achieve what they've been saying they will? Who cares? Skip it, move on. All right? Stick to the ones that are trending strongly.
Here's one we can move on to.
Yeah.
Francis would like to look at Take-Two, TTWO.O.
Yeah, Take-Two has been great. Now, it also has had its choppy moments. Right now, it looks like it's turning the corner. So despite the weakness in the market, this one has been showing strength. And not only has it overcome the 20, it's now taken out that prior high. So what we're waiting for is slope on the 20 to come back, and then a new entry here. Along this stretch lower, there were certainly opportunities to go short that worked out very nicely. Previously, you know, going back to last year, there were certainly some opportunities for the long side. But right now, we're in wait and see mode here. There's nothing to do but wait patiently, and we will be rewarded eventually here.
Okay, one more.
One more. Let's go ahead. One more, and then I want to show you the scanner and the expert commentary.
So this is an interesting one. This one, actually, Greg and I bought last, I think it was about a week ago, whenever this signal came up, DVN.
Oh, DVN, yes.
Uh-huh.
Devon Energy.
And I think probably what Greg wants to know specifically is like what you would be looking for as an exit. We're getting kind of to a point where you're very far away from the 20 SMA. So give Greg some advice. He'd appreciate it.
Sure. So there's a couple of different ways. First of all, there were some great signals here, and Greg, congrats on this trade. That was a great entry. There are a couple different ways that are a couple of things you can do to make sure you don't give back all your profits. First of all, when you have such a strong trend here with momentum, and you're consistently making higher highs from one bar to the next, what you want to look for is a pivot, right? So see this 3-bar formation here, the most recent 3 bars? That is telling us now with the completion of today's bar, which closed below the prior bar's low there, that's likely telling us that we will begin a retracement back to the 20. Okay, so along the way here, as long as you don't close below a prior low, that momentum move is intact. If you ever get a close below a prior low, we're likely to move back towards the 20. That's one thing to look at. Another is you can look to your left here for a prior high or some other target, right? Not sure that we have one there. Let's go to the weekly chart. Oh, yes, we do. So you want to take your line, and there you go. So this makes a lot, excuse me, a lot more sense. We moved right into resistance, as you can see over here. So this is a good spot for a potential pullback. Now, judging by the higher time frame chart, the weekly chart, even if we do pull back, it'll probably be short-lived. It'll probably come back to a prior high and then bounce and set up again for another move higher. Now, we could be wrong, and there may be enough momentum to blow right through all of this resistance and keep going, right? That's the importance of scaling out, right? So I don't know how big of a position you have on, but if you have, a sizable position, maybe you take part of it off here and hold the rest. The other is you can use your Fibonacci extension tool to look for overhead targets. I'm not sure we have time for that right now, or actually maybe let's quickly see if we can do that here. So you want to take a major low and high, right? But we should, let me see if I can spot one. Yeah, it's not, okay, let's do it this way. Our projection tool. Let's take the prior low and high. That's what you want to do. So even though this is spread out quite a bit, there we go. And there you go. So we blew through the 100% level. We usually look at another level in here, which is the 127.2% level, and then the 161.8. So based on what I'm seeing here, I would absolutely at least take some profits, if not all of it. That's a very nice trade. I would take that. Now, this could be on its way to the 261 level, right? If it clears this level, it's going there. But because we see resistance, because there's a pivot, because we've already achieved an important level, I would want to take some profits, if not all. So congrats on a nice trade there. Now, I know we're sort of running a little late here. I did want to show you the other tools that come with this indicator that are very, very important. If you look to the top left of my screen here, the menu bar, and we click the view button, we come down and I'd like you to select expert commentary. That brings up this box. Now in this box, it'll tell you what symbol you're on, obviously the date, etc. But it'll also talk about myself and trading wins a bit and the victory system. But there's something in here that's a lot more important. I want you to use this box once you're in a trade. It'll help hold your hand through the life of this trade. In other words, you may not be able to see it up here. There's a little triangle that hovers over the most recent bar, but because I have the black background, it doesn't show. Now you can move that. There it is, right there. If I highlight it, you see that? It always defaults to the most recent bar. Now you can move this anywhere by just clicking over a bar, okay? Or you can use the arrows up here on the top left of the expert commentary. So I'm going to scroll back there to where it was the signal, okay? So when there is a signal here, it'll populate some text in between these paragraphs that will tell you what type of signal it is. And it's color coded along with the bars. It keeps it consistent. So this is signaling a long opportunity. And also, once you move ahead, right, once it starts to move, it'll identify a stop level. So a level that if breached, you'd want to exit your trade. In this case, it's 29.15, right? But if we move above to the next bar, you can see now it's 29.37. We move to another bar, now it's 29.62. So effectively, it's helping you trail your stop along the way, okay? So it's very effective, very handy, and it does a real good job. Now, notice that the entry here was near 29. We're up to 40 almost. Today's close was 38.60 something. So amazing trade. And here we go. Yeah, right now it's got to stop at 32.62. So I encourage you to use this. Also, once you do get into a trade, and I should have showed you when we were at the setup bar, that if you're going to use options, if you're going to trade options with this, they're also in here. It tells you how far out, the expiry, what kind of delta you want to look for, just a few hints on how you might want to trade it with options, okay? Very helpful. And lastly, if you go to the power console, the P here in the top left, go to the Explore tab. The top section here is where you're going to select the strategy you want to scan for. It's in alphabetical order, so go to the bottom. Here are all my scans. What you want to select are the Vora Victory. Now, there's a Vora Victory and a Vora Victory Reentry, which the Vora Victory are the arrows. The Reentry are the dots, right? You can scan for one or both. But we've recently added a new one, which is filtered. So Vora Victory filtered and Vora Victory Reentry filtered. The difference there is the filter that was added was a slope on the 20 of a minimum of 5. It's numbered on the scan. I'll show you. Let me just select something to scan here. We'll run a quick scan just to show you. Here, let's go. Equities. Let's look at, what do we have here? Where are the index constituents? Here we go. So we'll select the Dow 30, for example, say the NASDAQ 100. Okay, let's try that. And then we go over here and we select our time frame. So, you know, if you're a 1 minute trader, you can select the 1 minute, 5 minute, whatever you want. I prefer to use the daily. And then click Start Exploration. Now, you'll quickly see how fast this goes through the charts. We selected 126 charts to review, and it's done. Okay. Now, it found one here. It's only 126 charts, but I go through usually anything that's optionable, right? Anything that has options available on it, which is about 4,300 charts, only takes a couple of minutes to run the scan, and we have a list of trade candidates. Now, this column here, the slope, see how it's a -6? Anything +5 or higher on the long side, or anything -5 and greater on the short side is what you want to focus on. And so since I ran the filtered one, it would only give me that selection. Now, once you have it here, you can sort by longs and shorts, right? If we had a long list of candidates here, the ones that have a number 1 in that particular column, that will tell you what kind of setup it is. So this one here on Dow is a short setup. It has a slope of -6, which is significant enough. That's the closing price. That's the symbol. If you highlight it, you can click open and you will see the chart. And there it is, right? So remember what I said at the beginning, right? What are the two things that you're looking for, right? You're looking for that new setup along with slope. So we have a short setup here and we have a significant slope lower. So this is a decent short trade candidate, right? Now, you can, once again, with the training classes that come with this, we will teach you how to look for things like upcoming, support or resistance to watch out for, or, trend lines and all these other things, how to compare one signal to another, all of that. This, to me, bit of a choppy chart, right? I don't really like trading choppy charts. I want nice, clean looking chart. So let me give you a couple of other trade setups that I found when I did my search aside from this. DLX. Here's a bit of a cleaner one, right? Still trending lower, significant slope. There you go. $35 stock, likely to continue going lower. I'd encourage you to also look at the higher time frames, right? So if you're trading on a daily, you want to look at the weekly and the monthly. If you're trading, say, on a 5-minute, you want to look at the 15-minute, the hourly. Always go up 2 time frames just to confirm that the longer term trend is in the direction of your trade, right? You want to trade with a strong trend in your favor, not a weak one. So the weekly certainly is, right? Has the monthly rolled yet? Almost. It's about to. Not quite there. But we do have a very nice slope lower. We've had several signals that have already worked well. And this one looks like another great short. Remember, the comforting thing here is that we know that if we enter this trade tomorrow on a break of this low and it turns on us, victory is going to signal an exit immediately. There's one more I want to share with you. FLS, flow serve, right? There you go. Sharp, sharp trend lower, right? And setups that have worked phenomenally well. We have another one here to the short side. Again, do your own homework, do your due diligence, make sure you're comfortable with this, ugly looking chart, right? After this one, move below all of this ugly activity here, right? That's why it went on such a steep drop here. It cleared all that support and just collapsed. Tried to recover, got up to resistance again, could not overcome resistance, and has failed again. So where is it likely to go now? Likely to come down here, right? Will it do it in one shot? Probably not. It'll probably come back to this level, find some support, bounce, set up again, and keep going, etc. But another decent short setup. So again, remember, trade with trend, trade with momentum, meaning slope on your side, and trust the signals here. Always follow the rules. Thanks again for having me on today, Jeff. I'm happy to stay on and answer questions if you like, but I'll hand it back to you so you can let everyone know how they can get a copy for themselves.
Yeah, great job. Maybe one more chart request from Nat,
Sure.
LPLA, if you don't mind.
Not at all.
And I think that'll cover everybody with every question that they all had.
All right, LPLA.
While you're talking about that, while you're loading that, Martin wants to know that will this work with currency pairs?
Yes, thank you for reminding me. I'll show you an example or two quickly. Here's LPL Financial, which, again, was trending really nicely. Look at these beautiful setups along the way. So easy. The benefit of trading with trend and momentum is that it doesn't make you sweat very much. You know what I mean? Usually when you get in, it just tends to nicely go your way regardless of what the market is doing overall, right? And here recently, there's the most recent signal, which has just done really nicely and looks like it has overcome that prior high. Yes, it has. So is that an all-time high? That's the other thing to look for. Setups near an all-time high. Once they break out, there's no resistance overhead. So they should continue. LPL is a great looking chart. Should continue. Again, if you didn't get in here, I wouldn't chase, right? Wait for the next setup. Wait, let it pull back closer to that 20, set up again, and as long as there's slope, go from there, okay? Forex pair. I don't know, let's look at Canadian dollar. Let's see. USD CAD should be
CAD equals.
Oh yes, CAD. Thank you. CAD
No problem.
Works the same way. Now, what I will tell you with forex pairs is a lot of times with forex pairs, you'll see a lot of choppiness like you do in here. But when one currency is really strong compared to all other currencies, you will see a very strong move like you do here, right? So that, and you'll notice the price action smoothing out, right? So this is a time where the US dollar was much stronger than the Canadian. And that's why this pair, and that's why it was dropping like that. But that's what you want to look for on these Forex pairs. But otherwise, it's exactly the same. It doesn't matter whether it's a Forex pair, a futures contract, a regular equity. It's the slope that you want to look for, right? And again, with the training that comes with this, we will show you what to look for. Here, for example, on this entry here, these two entries here, we knew there was going to be some resistance overhead. So it wasn't the ideal trade to take, even though the slope was good. But just goes to show you that even though there was resistance, the slope in the end, that momentum paid off, and it actually turned out to be a decent trade. What else can I show you? Maybe the JPY, Japanese yen, US dollar. Again, you see the difference here? Look at all the chop here. Look at all the chop here. Look at the strength here. So having patience and waiting for this sort of thing is exactly the way you want to trade Forex. I know a lot of you want to go, if you love the action day in and day out, you're gonna end up getting in trouble. Don't do it for the adrenaline rush. All right. Patience really pays off. Remember that. Patience pays when you're trading. Wait patiently for these setups. I mean, a move like this on a Forex pair, enormous. Absolutely enormous. You go from 105 to 109. You make 4 full cents on a Forex trade. Enormous. And that alone can make your year, let alone, fighting this. Why would you want to fight in all this? Don't waste your time with the chop. Look for a solid trend. Wait patiently and take those signals. But when it tells you to get out, get out. Don't second guess the system. If it's telling you to exit, exit. It's for a reason. I hope that helps. Jeff?
It helps if I turn on this button that says microphone. One last question from Robin again. He wants to know if there's a reason that you use a 20 SMA instead of a 20 EMA.
For me, it's just smoother. The EMA obviously will react a little closer, but you'll get a lot more periods where it's back and forth and won't get a clear slope. It's just something that, over the years, I've traded with many different strategies, many different indicators. I've been at this for almost 35 years now. The one constant has been the 20 SMA. I absolutely rely on this indicator more than anything, and it works exceptionally well. Again, the reason being, it's used by so many people, and you can tell how well it respects most charts. Most charts, you can just tell you're either on the wrong side of it or on the right side of it, and so you can really rely on this indicator. And coupled with the formula behind this, the 20 SMA works better in my opinion than the EMA. We also tested it with the weighted moving averages, and the simple just simply works best.
All right. Martin says, how about cryptos?
Yeah, we showed Bitcoin earlier, Ethereum earlier. It doesn't matter. It's based on technical analysis. So anything that you can bring a chart up on, it'll work on. It doesn't matter what the instrument is. It's technical analysis. So what we're trying to identify when we're trading, regardless of the strategy we're using, is we're trying to identify who's in control. Are buyers in control or are sellers in control, right? It's basic supply and demand. When there's more buying pressure, whatever that instrument is, it'll move higher. When there's more selling pressure, it'll move lower, right? But for us to try to decipher all the different data points out there in the markets, imagine us trying to figure out on a daily basis whether the market is going to go up or down. And you have the Fed talking about one thing, you have employment numbers another, you have GDP coming out, you have, the political side of things. It's absolutely impossible to review all that and figure out that next direction. But price will tell you everything you need to know. Because if there's more people buying, we don't need to know why. We just need to know what is happening. Traders that ask why or try to answer that question, why, are the ones who lose money. The ones who try to figure out what is happening and can do that make money. And that's what victory helps you do. It helps you figure out the what is happening. It's going higher. That's all you need to know. Look at the slope of the 20. If the 20 is sloping like this, it means the last 20 bars must have been moving higher, right? Because it's an average of the last 20 bars, right? So as long as it's sloping, it means there's more buying than selling, and that's what you need to know. Then the formula we have just helps you pinpoint the right times to get it. It helps you time it a little better. But otherwise, yeah, that's what you're trying to do here on a daily basis.
All right, Vince, I promised that was the last question a few times, but that was the last question. So Martin says, thank you. It helps a lot. And I'm glad. Ganapashod asked where the training is because he already bought Victory. So thank you for that. I'll show you where that is. Vince, before we do that, I want to say thank you for your time. I really appreciate it. I'm going to go ahead and kind of talk a little bit about the offer and where the training is.
Great. So, thanks again, Jeff. Pleasure.
No problem. Thanks, Vince. Always great to have you in here. Let me go ahead and show my screen. For you, Ganapathy, the question, and hopefully I said that name perfectly. I'm sure I did. But the question is where do I get the training? I've already bought the Victory method. Thank you for buying Victory. We appreciate that. If you come in here, the page that I just come down is metastock.com/mydownloads, and I've scrolled down towards the bottom of it where we have where we store all of the premium training. And so if you own Victory, you'll notice me in my basement and Vince right here. Yes. Oh, let me do this. It says that it's being shared, but let me try again. Will you let me know that you can see it now?
I'll let you know as soon as I can see it, but I can't yet see it.
Okay. Okay, let me do this. Sometimes this will work. And while I'm waiting for Greg to be able to see my screen, James says, awesome job. Thanks, James. I appreciate it. Greg, nothing still from the screen share?
Yeah, it just shows the title of our presentation in a big white screen. There you go. Well, now I'm seeing your browser.
Yeah, that's what I'm trying to show.
Okay.
So that's where you find the training. Okay.
All right.
So again, Ganapathy, thanks again for your question. Right here, as long as you have Victory, if you go to metastock.com/mydownloads and you scroll down a little bit towards the bottom of the page, we keep all of our premium training, and you'll notice there's a bit of a training video right here. There's basically 2 sessions. I'd recommend that you watch both of them. They're very similar. One was kind of built to be an encore of the other one. But we actually ended up covering a lot of really cool stuff in both of them. So that's why I couldn't decide which one I wanted to put up there. So we went with well, let's just put both of them up there. So as soon as you buy it, that's going to be there for you. So Francis says, thanks off. That's a good hour. In terms of the offer, for those of you that don't have Victory yet, obviously that was what we were showing with all the slides and that kind of stuff. The Victory method is the method that we've we kind of created this year. We built it towards kind of taking advantage of a more volatile market, which certainly has been the case this year. And it's a method that Vince came up with, and I actually helped him code it. But this what actually draws all the commentary on the screen for you. It tells you when to get in, when to get out. It does all the scanning. It tells you what the slope is during the scan. And as you saw kind of with Vince, it shows you where you get the triggers. You can go in and you can scan for either the triggers or the re-entry signals, and it's always going to give you that slope value as part of the entries and exits. It also does include system testing, and Metastock does have a really, really good system tester that allows you to go in and test these ideas as well. All of this is available basically at a one-time cost. Normally the Victory product's $1,997, but we are doing it basically as a webinar special today where it's $995. So if you're new to Metastock, if you haven't heard of Metastock, we actually will include Metastock. To give you some information on Metastock, Metastock's actually been rated #1 in its price category by the readers of stocks and commodities for like 27 or 28 years in a row. It allows you to do scanning and testing, and it's a great software program. I personally wouldn't trade without it. And I actually love the Victory method, as you could kind of tell with some of the questions we had. It's actually what we use, what a bunch of us here use in the office to find trades. So you get Metastock, you'll get a trial of Metastock if you need it. You'll get that bootcamp class that I just showed you. And we also are going to back this with a 30-day money-back guarantee. So that means you can try it. If you like it, if it's something that you want to keep, if it's helpful for you, you're going to want to keep it. If not, you can actually just return it and get a refund. There's very little risk as long as you evaluate it and return it within the 30 days. And I know as traders, that's probably like the kind of the risk reward scenario that you want to get every time. I would encourage you to try this. This is a great little product in terms of helping you identify what you should be trading, when you should be trading it, when to find those entries and exits. And we're going to back it with our money back guarantee. So 800-882-3040. You can also chat online with us at metastock.com/saleschat. And give it a go. See if it's something that's helpful for you. And I hope it is. I hope it helps you as much as it's helped me in any way, in any case. 800-882-3040, metastock.com/saleschat. Aside from that, I want to say thanks for coming. I'm glad you guys thought it was helpful. I'm glad you enjoyed it. I thought it was great. Vince does a great job, as always. Thank you, Vince. To you, thanks for coming today. I appreciate it. Stay healthy, stay well, and come back. We want to see you at the next one. So thanks again, guys. See you next time.